Let's go straight across to our market master for the day, Hiren Ved, Director and CIO of Alchemy Capital Management, joins us now here in the studio. Hi Hiren, good morning. Happy New Year to you.
Happy New Year to all of you.
Indeed, it's been a happy New Year for everyone, at least so far. I mean, great going in 2014. 2015 has started off on a positive note. Do you think this positive trend will continue, at least for the first quarter of the year?
Yeah, I think overall 2015 should be a good year. I think we've seen a lot of macro positives get built into the market in terms of, lower oil and commodity prices. Hopefully, on the back of that, we should see sometime in 2015 interest rates start to come down, though they're already starting to reflect in the bond yields. And I think you should start seeing earnings pick up because, maybe not this quarter, but starting from next quarter onwards, companies should see the benefit of lower raw material prices seep through into their P&Ls. So that should support profit growth as well going into the couple of next quarters.
Hi Hiren, good morning. Has Alchemy come out with the year-end target for the Nifty? And which would be the key themes?
Well, we don't publish, we are a buy-side firm, so we don't publish any targets or...
But okay, so then let me rephrase it. Will 2015 be as good as 2014?
Well, I mean, it's difficult to say whether, will it, in terms of percentage returns, give the same returns or not. But a lot would depend on, the cost of capital and interest rates, and also how earnings pan out. But I think it would suffice to say that we should have a good double-digit return year. I think the markets anticipated a recovery on the back of a good government last year. And so I think, as it usually happens, the PE of the market goes up first and the earnings follow. So I think the markets are now waiting for the earnings follow-through to happen. So, and I don't think markets are trading at very expensive multiples. I mean, we are trading at about 16, 17 times 1 year forward earnings. So we are at kind of average valuations. We are not very cheap. We are not very expensive either. But I think markets should hold up and give relatively good double-digit returns this year too.
Okay. We were speaking in the break, Hiren, that, the economy-related sectors are doing quite well. In fact, this morning as well, if you look at the top gainers, you have L&T, you have Maruti, you have banks like Axis Bank. So, is it a blind call that you just play the economy sectors and you'll be able to max the returns this year?
Well, I think, it would be fair to say that, this could be the year where the economy starts to turn around. Whether you should blanket play all the economy sectors is to be seen, because I think that there are still companies out there and sectors which are still highly leveraged and the balance sheets are not yet repaired. And I think that balance sheet repair process is still underway, and it's going to take a little bit of time before that gets sorted out. And as we've always seen that in the past, the leaders of the previous cycle are never the leaders in the next cycle. So one has to be careful, and I think that maybe some of the quality companies which have not had balance sheet issues should be able to take advantage of the upturn in the economic cycle, and they would benefit the most also from a stock market perspective. So I think there has to be a little bit of differentiation between what happens in the economy and finally what gets translated into stock prices. So I think the theme has to be, yes, companies which will benefit from the upturn in the economic cycle, but at the same time, it's only those companies whose balance sheets are in good shape will be able to take advantage of that. And that's important from an investor's perspective.
Hiren, the big story of 2014 was the steep 50% decline in crude prices. While net-net it's positive for India, it does to some extent reflect the slowdown in the global markets, the sharp decline in oil. What implications will that have for emerging markets like India, the global space and what's happening there? And is it emerging? Can it be a big risk in 2015?
Yeah, I mean, clearly if you see For India, it's a net positive, whichever way you look at it. You know, a 50% fall is really helping to repair India's balance sheet from a both current account and fiscal deficit perspective. But, you know, such a sharp fall could have, you know, what impact it could have on some of the producer countries is yet to be seen, I think, and potentially that could be an area of risk going forward if there is a disorderly fall. You know, some of the banks in those regions could have large exposure to those economies. There could be cutback in expenses and, you know, all these countries were net significant savers because of, you know, rising crude prices. My belief is that if they continue to keep their budget expenses the way they are, they will be net dissavers in the markets, right? And all these institutions were big investors in financial assets around the world. So what implications it has when you go from becoming a net saver to a net dissaver to financial assets around the world is yet to be seen. I mean, you know, we will have to wait and watch, but that could be one area of concern that might emerge a couple of you know, months and quarters down the line.
Is this a base case assumption, or do you think that this is a remote possibility of it happening? Disorder in you know, producing countries.
Well, I mean, you know, we don't know. It's very difficult to figure out whether oil prices stabilize and then rise from here, or if there is a further fall. But I think the way oil prices have reacted so far, it looks like that they're not going to bounce back any soon. So, you know, one will have to, you know, watch and see carefully what happens to the producer countries, you know, a couple of months down the line.
Okay, we'll come to your top sectoral themes in a bit, Hiren, but before that, one more question, broad question. What is the expectation from the budget this time, and do you expect a pre-budget rally to play out?
Well, I think it's tough to figure out, but I think, you know, one of the things that, you know, personally I feel the budget will be good. You know, I think if you look at what the government has been doing over the last, you know, few weeks, they have been on the job, you know, passing ordinances, you know, working on many of the issues that they could not resolve during when the parliament was in session. And they've shown pretty good resolve in taking things forward. I think, you know, one of the key things that I would look out in the budget is that the time has probably come that the government kickstarts the investment cycle. You know, my own feeling is that some push will have to be given by spending money on capex by the government and the PSUs, because I think the private sector is going to take time to start spending on capital expenditure. And one reason is that you know, across the board capacity utilization is still much below. So typically, you know, unless you reach you know, 90, 95, 100% kind of capacity utilization levels, the private sector is not going to increase capacity. And I think that there is some institutional memory that is still there, because the private sector's foray into infrastructure building was not exactly a very successful you know, venture over the last few years in the previous cycle. So I think there is going to be some reluctance on the part of the private sector to spend on infrastructure. So that gap has to be filled by the government. And if they can show in the budget that the savings, some of the savings that they've got because of the fall in oil prices by way of subsidy, etc., if they're going to increase plan expenditure.
Passed on in the form of higher plan expenditure.
Right. And the fact that, you know, if they can use some of that fiscal space and spend a little bit more on capex, on plan expenditure, that would be a very positive sign for the market.
Okay. Running out of time, so just, you know, one quick question on IT and Infosys in particular. What would the expectation be, and is Infosys stock a buy at current levels?
Well, I mean, you know, it's difficult to comment on a single company, but I think that obviously there's a new leadership there. You know, there seems to be a course correction. One will have to wait and see what that course correction means for the company, but I think you know, they're probably doing all the right things. The good news is that the US economy is doing quite well, and I think if tech spending in 2015 continues to grow, the macro context could be also slightly more favorable for some of these technology companies. So on the whole, I think tech should do quite okay. But at this point in time, my sense is that the leadership will remain with the old leaders. One will have to watch and see if some of the changes and restructuring that Infosys is doing really starts to get reflected on a sustainable basis.
All right. So leadership continues to remain with the old leaders like banks, I assume. Hiren Ved, pleasure as always to speak to you. Thanks for joining us. Well, that's the word coming in from Alchemy. Positive on the markets. They believe that the economy will turn around this year.